Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. Meet Kraken Institutional. Whether you're an asset allocator, a trading firm, or high net worth individual, Kraken Institutional unlocks the powerful tools you and your organization need to trade and manage crypto at scale. Reliable, easy to integrate, with white glove service and 24/7 support. Visit kraken.com/institutions and get in touch today. This is not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payword Interactive Inc. View legal disclosures at kraken.com/legal/disclosures. What is up, everybody? Welcome back to another Roundup edition of Forward Guidance. We have
RFK.
Got RFK in the house today.
Let's go, boys. So good. That is so good.
How are you Americans feeling today, this week?
I know Quinn's strong. Yep, we're good. I feel like it's already Friday. I feel like I've done a lot of victory laps, so I'm a little tired and trying to remain more forward-looking now, but pretty good. Even when you sleep on it, it feels even better, I'd say, than I think most people were expecting.
Was the outcome better than you expected, Quinn?
It's just nice to get it in the bag. I thought it was going to be a landslide. Yeah, I thought it was going to be a landslide. I mean, Polymarket had it 100% accurate, which is fantastic, and I think that was generally right. Like, I didn't think she was going to win too many of the swing states, if any.
Yeah, I feel like the two big things I want to cover on this is obviously the market impact since and leading up to it, into it, and what we've seen. But then also just like this, it feels like this election cycle, there's just new media components born that really took the torch and ran with it. Like, I don't know about you guys, but like when I was looking at everything, I had a million windows popped up. I had cable on and watching, and like, yeah, Polymarket and like the odds websites, they nailed it. At the same time that you're seeing like, I don't know, the traditional media components, Nate Silver was going in at 50-50, but it was obviously like incorrect. I mean, it was such a landslide that just like going into that with that sort of perspective is wrong.
Did you see Keith Rebois, his bet with Nate Silver? I mean, this was the death of the experts. Basically, Nate Silver, they had some bet. I don't know if they actually consummated it, but Nate lost a bet thinking, Florida wouldn't go to Trump by, I think it was like 12 to 14 points against Keith Rebois, and Keith Rebois just shoved him in a locker and was like, which is just like, this is so fitting. I can't, these mainstream network people they're such fakers.
Yeah. What do pollsters even do at this stage? Like, this is 3 elections in a row that they've just been incredibly wrong.
Well, just show me the incentives and I'll show you the outcome. I mean, like, these people, who's running these polls? New York Times, ABC, Silver's been compromised. Read any of his stuff, and he's like, every time Trump would take a lead in his model, he'd be like, well, it sucks and I'm sad to report, and she still has, it's like, all right, yeah, throw this out the window. It's garbage. I mean, the Ann Selzer poll, I mean, give me a break. How much did CNBC or NBC pay? Oh, by the way, one of my favorites, Joe Kernan on Squawk Box in the morning. Man, he does God's work in the mornings, just absolutely dismantling these things. I'm surprised that NBC lets him just go in like he does, but he's my favorite.
One of these guys, he was Mr. Beast's manager. I ended up investing in his venture fund, but he follows basically decentralized media really well. And his name is Reed Ducher. I think I said his name right, but he writes this newsletter and he says, at one point during the night, there was almost 2 million people watching streamers cover the election on Twitch. And the same could be said about YouTube. It's always been something that I've known, but after last night, there's no doubt in my mind that the way we consume and get news will be forever changed. Compared to 2020, this election's viewership was down 25%. In my mind, this was definitely going to happen given how many people were going to YouTube, Twitter, and Twitch for election results. And then he has this chart. Okay, so top channels who covered the US election on election day. And this is the individual streamers are the pink and the networks are the purple. But check out these numbers, like 515,000 Bongino, Steven Crowder 460, Hasanabi 300,000. These are individual people competing with, speaking of like experts, what's the overhead for Fox News to get 1.1 versus, Steven Crowder at 460? These business models are just completely, and they're not only that, but they're wrong. Like all their data is wrong compared to like a guy with a good spreadsheet. And therein lies, like, think about the power dynamics that are about to shift with this. We're watching very first turning stuff before our, I think this is obviously a huge first turning, and we're watching new institutions be built.
Yeah, I think that's so key. Like, this is something I interviewed Jem Carson about a couple days ago about the impact of the election. And I asked him about this. Is like, why do you think these pollsters keep getting it so wrong? And his point was that, yeah, I mean, they only look at 40 years of data. And, we're talking about major cycles here. You're talking about like first turning stuff. Like that hasn't happened in 100 years. So like intuitively as people, as society, we understand these phase shifts, but it's not being picked up in like their statistical models. So I feel like that's also why you're seeing like individuals, with skin in the game, betting on Polymarket. They have a more intuitive understanding of what's going on than somebody who's just running like a back test on like only 40 years.
Yeah.
So the explanation here is either dumb and stupid or deceitful and like purposefully lying. Like there's two explanations. And I tend to think, these budgets of these companies, right? Like they're able to, they spend months and months and months and years building these polls and these election night algorithms, and so I have a hard time relying on stupidity or lack of intelligence. And I think there's a lot of other signs that would corroborate as well that maybe it's a cynical take. I don't think. I just think it is what it is. I'm not. I think it's more deceit and purposefully lying to paint the image because and Tyler, I love this chart because people don't want to get lied to, right? The mainstream media has become an arm of the government. And in China that works because they can block access to YouTube, Twitter, Twitch, all these other things. So, and then they can pump out their state-run media stories to say whatever they want. And in the US, we have morphed into this state-run media, which is why they're so up in arms that Trump, he wants to dismantle the power that they've accumulated. And you're seeing people just are like, obviously there's a lot of noise right now about, Democrats kind of, over 50% of the country like is wrong. And like, I can't believe it. And it's like, no, actually probably a bunch of people within the Democratic Party who are rational are actually saying like, wow, we were just lied to blatantly. First with Biden's health, and second with that she actually stood a chance and like that she was a good candidate. It didn't matter. Like she was going to lose from the beginning. And
Quinn, I want to ask you about that though, because like, you've had this thesis that you feel like this will be like a unifying moment, but like when I hear some of these narratives going on, it still feels like more fracturing. Do you still see that occurring? And like, what's the path for it?
Yeah, because I think ultimately everybody prefers, the majority, let's say, ultimately prefers truth because you can only live in suspended reality for so long. And I think a lot of what Trump has run on and the people he's brought, he's emphasized team a lot. If you look at all his ads, right, it shows him, RFK, Elon, all these people on his team seeking. And like a lot of people eventually, prefer truth and facing the music than living in this kind of fake world. And, going after, I don't even think like what Trump wants to do is that partisan. I think it's more class. It's more, and you look at the people who are upset, it's not left or right. It's rich versus poor and middle class, in my opinion. And I think the generational shift that's ongoing is the bulk of the country wants someone who's socially liberal and fiscally conservative. And wherever you fall on that spectrum historically, like in 2020, Biden was viewed as more of that, right? Like, and Democrats traditionally have kind of been in the center, but Trump has moved the whole Republican Party to the middle on, he's way more socially liberal on green energy, on abortion, just leaving it up to the states, not outright banning. Like he's brought the Republican Party towards the middle. Meanwhile, with Harris picking Tim Walz, who lost his own freaking home county in Minnesota, they're moving to the left. And so you're just alienating so many people that just want kind of more rational views and not so partisan. And I think that's how I view it. I think he will be unifying because, like, again, all these things like dismantling big pharma, the Make America Healthy Again, like deregulation. Like, I don't see many of these things as like that blue or red. Like crypto. I mean, crypto that should be embraced for the little guy. It's a grassroots asset class. That's why institutions have fought it for so long. The big banks hate it because it's disruptive. And like he's embracing this. These are people see through the MSNBC noise narratives, and I think that's just becoming more. And I think you need to get unity. Jem talks about this, right? You need some sort of event to catalyze it. And I think if people feel like they've been wronged by the kind of BS they've been taking and for a long time, I think this is something that I still do have that. And I think on a global stage, it's happening in real time as well. If you look at Putin ready to settle, Middle East, China, like everyone's getting in line real quick.
You know what? To me, it was fascinating is after the election, Bernie Sanders came out and basically
I was about to say I saw a statement from him. Yeah.
And I always like Bernie Sanders because he's real and he completely dismantled by the entire, progressive billionaire Democrat apparatus.
Imagine the different world the Dems would be in if he like got the nomination in 2016. Like it'd be a totally different party.
And what's so funny to me is like this populist movement could have gone to Bernie rather than Trump, but I think whatever weird incentives, it was like globalist, weird power structures.
Yeah.
Kind of like toss Bernie to the side. And I hope, I would love to see a great Democrat up and coming candidate that embodies like a JD Vance. Like I think all Americans that instead of this, whatever this last regime was just bizarre. It was really weird. And I'm so glad we're over with it. I say that, also saying, there's some things that Biden did that was really good, but like that campaign that was run was not democratic and it was just bizarre. And like, I hope people can kind of see that at this point. It's clear that,
I mean, one way you could think about it is this, like there's that chart going around. It's the first time in like 40 years or 30 years that it wasn't a Clinton, Bush, or Biden or something on the ticket or whatever that was. You can kind of think of that as the Democrats need to have, the Democratic Party is going to have their sort of Trump moment, right? So like Bush was, the last kind of Republican president in that side. And then, you obviously had John McCain, who was definitely very, war hawk, George Bush-esque. Mitt Romney was sort of a shift towards a little bit more maybe centric. And then you had Trump, who completely flipped the script and said, enough of this, like completely far-leaning right, anti-abortion, like all these things, and really moved the party kicking and screaming in 2016, absolutely kicking and screaming. And now they absolutely love the guy. And then you look at the Democratic side and it's kind of just muddled along with the holdovers of the Clinton, Obama, like, that stronghold of just legacy versus actually merit and new ideas and changing with the generations. And so I think you could see some contender come up on the left who's just radically different than what they've went with and gain a lot of traction, because now everyone's like, well, it didn't work. Like it hasn't worked. And honestly, for Trump, it's probably better he wasn't reelected in 2020 in hindsight now, because he's going to be a lot more effective. And I think, people will probably give him a better shot now than if he just kind of carried into another 4 years.
Yeah, I agree with that. And even though I'm Canadian, as somebody that has been like extremely alienated by the Democratic Party, and then also like doesn't really like Trump as a person, but understands the policies there that are obviously better, that leaves a weird world. And yeah, hopefully we can just continue in this. All I want is that unity that you talk about, Quinn, and I'm hopeful about it as well. I want to talk a bit about the market impact now. From obviously we got the big one is that we got a sweep of Congress. Highly likely. I don't think it's been confirmed from the House yet, but just want to get you guys' takes on like what are the implications there. Obviously, there's a lot of thrown around about the main policies about tax cuts, tariffs, drill baby drill, these type of ideas. But just want to get your takes now that we're seeing that it's going to be highly likely and there's going to be no gridlock in Congress. How are you guys thinking about how policy evolves from here on out?
For me, I'm watching. There's been, you could call it a 30-year cycle from the private sector to the public sector in terms of, I guess, power structure. And these institutions made it a lot harder, and they grew so big and sclerotic and bureaucratic. And now you're watching almost that crowding out effect. If this is done correctly, meaning Musk comes in and you have lots of productive capacity open up in the private sector and chop down the red tape in the public sector, imagine what type of growth that would release in investment and disinflationary pressures. And it really could be epic. And, Mark Andreessen said we could move to 6% growth per year. Imagine what that would do. Delever the economy, delever the debt bubble that we're in. And it's very early, but we have that, given the timeline of this Neil Howe fourth turning to first turning narrative, there's lots of stuff that appear to be like believing it. And especially space stocks, that I always think when the frontiers open, I've talked about this in and out probably every week, but watch the frontier markets, Bitcoin, space, biotech. Those are going to tell you whether or not it's working, because when investment goes to those places, they're usually, high capex, not necessarily crypto, but like places where there's a giant TAM down the line and money will seek it out. But if you have the administrative state taking power and the crowding out effect happens, then, and this is also contra-wise, everyone thought, oh my God, yields are going to spike here because the deficit will blow out, all this other stuff. And, Zervos had a great call this week. He's like, that's kind of nonsense. You might actually get some disinflationary pressures from Trump, for a lot of different reasons, technological advancement, productivity, yada, yada, yada. And, we're seeing oil down to $70 today and yields back in. It's fascinating how these narratives, they can, and we were talking about it here, how they get so stretched. We saw it on the FX side, we saw it on the fixed income side, and now people are like, oh my God, what's going on? But I think over the long period of time, we're in a productivity boom, which should help assets should help equities relative to fixed income. You just got to be in the right sectors. And in fact, this rotation from giant centralized capital to more decentralized capital, from like the Qs to IWM on a relative basis, is probably huge. Like we woke up and IWM was up like 6%, and the Qs were, they were up, but not as much. I think all these things are going to be secular here if they can keep, attacking it.
Yeah, I think those are great points, Tyler. One of the funny things to me was all the fear mongering. I mean, whether it was about who was going to win, whether it was about being contested, just hollow, non-substantiated, just regurgitating popular narrative claims was just it was such an easy fade for how loud it got. I would say. I mean, we were pounding the table. Your
This
meme
is
is
this is
perfect.
our meme from last week. We said I think it's going to be decisive and nothing will happen. Like obviously something happened, but I mean, like, you know, it wasn't cataclysmic, it wasn't contested or anything.
And Wednesday's price action showed who was right and who was wrong. You had all these people saying how irresponsible it is to be positioned going in and yada yada yada.
I love that.
And yeah,
I mean, I was trying to say that last week. The price of insurance was up
Yeah.
so much, and you're better off selling insurance when that hurricane is coming and the price is egregious. Sell the insurance.
Yeah.
You know,
Yeah. If you listened to us last week, yeah, you know, you knew that vol was excessively bid up.
and how about and where's the like reflection from these people who were screaming, we just rag the media, but how about everyone fear mongering and then they're saying, oh, you should elevate cash levels going into this unknown event. And then everybody wakes up Wednesday and freaking small caps are up 6%. How about that? Like, what do? You just missed out on a third of the year's gains in the index because you sat on the sidelines. And it's like, you can't do that when you're like, boom, you're underperforming your benchmark 6%. Wow. Like you're screwed. Like
they're risk managers. This is part of the problem. They're risk managers. They're not investors. This is how we got into secular stagnation in the first place, is because you have all these fucking morons, excuse my French, that want to just get out 3 to 5%. And then that kills American innovation because you don't end up investing in future growth. Like the whole premise of investing is to take an idea that hasn't happened yet and turn it into something. When everyone else is doing risk adjusted returns, you risk adjust everything and then you're just part of the crowd. And it is what it is, but it's great for a boomer, depending on your age and incentives. I get the whole marketing thing, but in general, it's terrible for America because if you have risk parity out the ass, now it's presenting active managers like us opportunity. And that we have to be like jujitsu. When you see, like, I have a great chart, tech outflows for the past 4 weeks were the biggest since 2002. That was all systematic risk adjusted returns. Like all these quant strategies that try to not make money. It's like, let's just not lose your money.
Sometimes you just need to have some skin in the game, expose yourself to some risk. If go read this book and believe in something, sometimes you just gotta put your capital on the line, even though
he's kind of a pedantic asshole, that guy.
He is a pedantic asshole, but I like the book. I like the point of it.
I mean, that's what people probably think of me right now, but at least if I'm wrong, at least I'll roast myself. I'm from Jersey.
Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through its Ledger Secure Chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. It's about enabling you to build and grow your crypto practice via deep liquidity, industry-leading security, and white glove service. Think 24/7 support from an award-winning account management team and expert guidance through your institutional crypto journey, from onboarding to product demos and more. Experience it for yourself. Visit crackit.com/institutions and get in touch today. This is not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payward Interactive Inc. View legal disclosures at kraken.com/legal/disclosures.
Yeah, I think the market showed its hand the next day, right? Everybody, for all the talk, right? We have 4 years to look back on Trump and what did he do? And he was super bullish growth. I mean, people saying he's drill baby drill, but oil price was up almost every year of his presidency because economic growth was up. People say he's horrible for China. Oh my God. And the Chinese stock market was one of the best performing equity markets during his first few years. I mean, Mexico, he recrafted NAFTA into Mexico and restrung trade deals. Like, he's a businessman, and I think everyone kind of having the realization overnight, like he doesn't come into these global situations where you have Lindsey Graham and Dick Cheney, like because someone said one not nice thing, they said like we need to nuke them. He's not looking to kill and get into wars and cost American life. Like everybody is a competitor. No one's enemies, right? Everyone is like there's a deal to be made. And if you view the world that way, like that's positive for the markets, that's positive for growth. Like he might have a certain view on immigration, but he doesn't want inflation. So he's going to make sure, find workarounds. And I think that's what kind of people have to realize. And on the deficits, again, we were pounding the table on this, like all these fears and how a lot of this move in bond yields was kind of offsides hedging and fear as the move was so high. And so now we're seeing, just like a company might have a decent earnings quarter, but if expectations were for them to blow it out of the park and it was still good, but it just didn't meet expectations, then the spot price can fall. And that's what we're seeing with yields here is people, we got that bump in yields because he's pro growth, but then it didn't justify the massive implied vol in the move. And it's melting off.
You can see it here in this chart, like it's just cratering. And then, you look at, I just have this chart as well of like the VIX contract before and after. And for people that don't look too much at futures curves, basically like we've gone from this like hump at the front of a very elevated premium and just basically fear to a contango market structure that's a lot more constructive. So you can just see like, everything we talked about last week in terms of just like basically fading just how bid up implied volatility was, and that being one of the main reasons for seeing such a surge in yields. Like we're seeing this happen now where, we can get into this, might be a good segue into it, is just talking about what we saw at the Fed meeting yesterday. But, they cut rates and they're pretty dovish and bond yields are coming lower, I think if you could have asked a lot of people what would happen in that circumstance, and they'd say, oh, the Fed's going to continue losing the bond market and we're going to see bond yields keep surging. And I don't know. Like, I'm curious what you guys took away from that on yesterday's FOMC.
I just think the event risk is rolling off. It was already priced in, 98% chance. I mean, I'd love to show some positioning things too, just to show, besides the VIX curve, go to slide 31. This was when everyone's saying, play it safe and raise your cash. This is Scott Rubner at Goldman. Unwinds of short-dated election hedges create synthetic demand. For example, on Monday, the CBOA put-call ratio was the highest since September 24th, 2021. So everyone had downside puts. And then, you could go, you already showed the bond vol smush. This is the VIX 9-day on slide 33. As that protection rolled off, the VIX 9-day VIX fell 50%. So now you get, FOMC rolls off. It's fallen even more today. And all these, and then this is the best. This is my favorite. Go to slide 36. This is the risk parity positioning. You can see how it dropped in August. And now you have these massive outflows the past couple of weeks ahead of the election. And heading into the lower VIX, quants may need to buy 110 billion of U.S. equities from now until January. Vol-controlled funds are expected to buy 50 billion of stocks in November and 110 from now until January, according to Nomura. Leverage ETFs are estimated to have bought 15 billion of U.S. equities on Wednesday, according to Morgan Stanley, with dealers buying 5 billion U.S. equities yesterday. Let's also not forget buyback programs are in full force, which means 125 billion of equity buying in both November and December. So it's like, I think it's 6 billion per day in daily VWAP volume of buybacks too, which should stifle vol. It's just really incredible that after all this FOMC election, those were systematic things that were going to happen anyway. But all the systematic guys delevered because the VIX popped. The whole market structure is just so stupid right now. And I think we're watching the end of like the quant bubble right now. And people will start outperforming. Hopefully active managers start outperforming here as they understand like these rules-based investing things and risk-adjusted returns are going to go out the window in this new era.
Yeah, it's quite dramatic when you think about one, the level of fearful offsides positioning going into what happened to be just a complete non-event. And it wasn't just a non-event, it was an extremely positive event.
Yeah.
A red sweep with a clear, electoral plus popular vote win and a very obvious mandate to implement the changes they want. Um, Everything kind of lining up to be quite pro business friendly, at least pro Main Street business friendly. Like TBD on if it's good for large cap tech and semiconductors and those safety trades we've been seeing. But yeah, I mean, you also have we were the question started on the Fed, right? And the Fed people, I mean, again, like people arms up in the air, saying all these questions. Why are you cutting when inflation expectations and all this? It's like, guys, the simple answer is their mandate is 2% inflation as measured by their go, talk about the measurements. Don't talk about they're doing something wrong. Talking about they should be tearing up the CPI and the PCE and fixing the weightings and
Yeah.
because that's all they're doing. So if you just look at what they're doing, the unemployment rate's rising and the inflation rate, CPI is at 2 point. I tweeted this chart. CPI was above 7 when they started hiking, and it's at 2.1 now. So they're vindicated. And his speech was just nothing but dovish.
Yeah, people are letting their biases, I think, overrun them because like they just want Powell to be bearish and hawkish so badly. And you could see this in some of the questions that they're asking Powell too. Like, they were, they got him to ask to like talk a bit about inflation, and he was like, yeah, well, it sounds like you quoted a 12-month core PCE at 2.7%, but like, just look at 3-month annualized or 6-month annualized core PCE 2.3%. If you look at the headline PC on a year-over-year basis, we talked about this last week, but that's at 2.1%. Like, he was making it extremely obvious that he does not care about inflation, and he won't for a long time. And yet, that is all they want to ask him about. There's a question about like, what would you do in the circumstance of if, what's your plan for stagflation? Like
Yeah.
that is just the most ridiculous question I've ever heard. I kind of got pretty fired up yesterday hearing about just some of these like press conference questions that they're asking because one, nobody asked him about QT, about the balance sheet. Like we're seeing yield surge, we're seeing the RRP almost get back down to like $100 billion. There's most monetary plumbing experts are thinking that we're going to see like QT end in like the first quarter 2025, and it just feels like irresponsible for the fact that they're asking him these ridiculous questions about like what would you do in the light of stagflation, and his answer was like, well, that's why we have the entire Fed mandate. Like, what kind of question is that? And yet nobody asked him about QT. What's the plan for QT? Not a single question on that. So that was
And my favorite my favorite oxymoron I
That's
find it
Canadian. Sorry.
I find it I find it so ironic because it's always the people who are saying who are talking, you're letting your politics get into your market views and yada 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 and when it's usually about, and it tends to be about Trump stuff. And then you have these same people saying it's bullshit that Powell's still dovish when Trump's just won the election and he's gonna. It's like, wait, inauguration's in 2 months. There's nothing been passed, nothing even been proposed. The tariffs we have 4 years blueprint of tariffs and there was no inflation. Like, what is Powell going to do? Come up there and say it's because Trump in a campaign speech said that he might tariff a country if they like, it's so idiotic. Like,
yeah.
this makes
And
no
he
sense.
dropped a few hammers that I think were really good. Like he was like kind of emphasizing, it was like, look, we have 0% weighting in terms of potential policies until there's a bill in Congress that is passed, So it's like, we're not going to hike 50 bips today because we think, oh, tariffs might happen, especially because like, I think a fraction of the amount of tariffs will actually occur that he's talking about.
It's just like so dumb.
Yeah.
To Tyler's point, like the
I love
market
it.
structure, it's great. I mean, it's great for us because like it's great for active managers because in the same way that the market structure has become kind of perverted and just kind of liquidity driven by centrally manipulated organizations, governments, it's also the narratives and how quickly we go from one side of the boat to the other, and there's like complete and total loss of like first principles thinking. I see it. Which you think of the investment community as very skeptical, open-minded, and hard, like do your own research, your diligencing things. And like the majority of stuff is just like the quality just gone downhill in that regard too. I think like people just regurgitate these popular narratives.
You know what? I talk about this a lot with my boss is, what the market generally, people that gravitate towards the market are high achieving, really smart people, but they are, if you take like, you're probably top of your class at some really well esteemed college or institution. And what that really does is you've always been the smartest, and you're kind of you're not self-aware enough to realize that you could be wrong. You're basically self-reinforced. But when because some of the best investors are like street smart guys that went to like SUNY Binghamton or some weird
Yeah,
like
like Stephen
college.
Cohen and people like that.
Yeah, like, and I always found it funny because just because you're really smart in an IQ sense doesn't mean you have the street sense to be an investor. Sometimes that happens, obviously, too, but it's a fascinating, like, in any other industry like sports, you get alienated really quick when you suck at it. But this is the one industry where you can stay in it for a whole career and suck at it. And people you know what I mean? Like, I don't
Tyler
think
just murdered every macro doomer substack there.
$1 billion funds that like
Yeah.
underperform every year, but because you're in this giant like asset gathering marketing bubble, it doesn't matter.
Yeah.
I always found that fascinating.
So what do you guys think is going to happen for, the December meeting onwards? Because it felt like, when I looked at CME futures right now, it's about like 60%, I think, odds for a cut in December. But when I was hearing Powell talk, and I know Quinn and I, you were talking as it has happened, but it felt to me like December was a lock, like what would need to happen for him not to cut in December? Probably an extremely hot labor market print, because he does not care about inflation. What do you guys think?
But even I don't know if that would, because he's like reiterated for, like the last bunch of times he spoke, he's like reiterated there's no inflation coming from the labor market. He views the housing and rent and sticky inflation is very lagging. And he said in this meetings, particularly, one, someone asked about like pausing and slowing the pace. And he's like, yeah, of course, once you start cutting and you get incrementally closer to neutral, then you start thinking about having conversations of how to slow the pace or, whatever. And he's like, we just kind of started having that. It's not, we're firmly easing in the firmly easing cycle. And then I think the other one was he noted on the inflation, he said, one good print or one bad print isn't going to really alter things from here. We know it's going to be a bumpy road, and we believe from our signs. I mean, look at like he's looking at things like the JOLTS quits, which show the ECI, employment cost index, that show wage inflation isn't really a big deal. So even if a hot print comes, I feel pretty good that December's going to happen at 25, and then I think they probably should pause after that. You get the rate down just above 4, and they should kind of probably wait and see a meeting. And then it's January and March. So the next meetings, they probably skip January and maybe they go again in March. Maybe they don't. If things improve, then they don't need to. But like, I think it's pretty clear. And I also think the market's expectations are some of the most fair and appropriate that they've been in a long time. And that was part of my thesis going in here, is that like once you clear the election uncertainty, you have that clarity in so many fronts on policy, pro-growth, from a government perspective, but also Fed path. And that's why you're seeing the move melt to the ground. And I think it sets up a nice runway here for people to kind of take action in the portfolio.
Yeah. I mean, it's pretty simple, honestly. Like, it's just like, the Fed, regardless of what your opinion is, their opinion on neutral and whether they're restrictive or not is that they think they're restrictive and that they're not above neutral. They want to eventually get to neutral in the next little while. So they're going to keep cutting. You can have an opinion on whether you think neutral is higher. That could maybe, lead to inflation to reaccelerate as they get, potentially accommodative and below neutral if you think you have a higher neutral rate. But the fact is they're going to keep cutting, and they're going to keep cutting for a while.
Yeah, they said, he's like, we don't know how restrictive we are, but we know we firmly believe we're restrictive, basically. And like, yeah, they're gonna like. Oh, the other point, he said, we really are not welcoming of further deterioration in the labor market. He said, we think the labor market is weaker now than 2019. And obviously they were cutting in 2019. So there, although the mandate is, um, uh, it's more balanced now. I think it's still skewed towards labor weakness, and people just concocted these narratives themselves in the market about, oh, yields are rising, he's got to do something. It's like, no, the yields rose to price out a recession. The yields were gapped down way below what they should have, and they asked him these stupid questions too, like wasting up all this time. Like, what do you think about yield? He's like, yeah, it's pro growth. Like, I think he said the left tail got removed of a recession because we said we want to backstop the labor market. It's like, yeah, it's like, that's what happened. Like, people trying to like spin zone everything he says. And it's like, just take him at his word and you're fine.
I think what you have to watch is forward break evens, because that'll give you a sense if inflation's really turning up here or not. And then the Fed will probably change its tune, because then they'll have to tighten. But right now, 1 year break evens are at 240 and almost look like they're going to roll over here lower, which maybe even might portend lower oil. Like, you might get in, this is kind of funky, but you could get into lower oil prices, lower yields, lower US dollar, because that incentivizes the Fed. And, what do equities do in that world? That's kind of what I think might possibly happen here. Everyone thinks, oh my God, they're lowering interest rates. Oil's going to spike. But what they don't take into account is, what if Trump is this peace dividend, where the geopolitics become very, I guess, like less adversarial. And yes, tariffs are could be inflationary, but they're not saying that. Will's not saying that. Well, these are all themes we're gonna have to watch in the next year. But it's highly likely, like, if the Ukraine-Russia thing gets diffused and Russia starts providing energy to Europe again, and there's this new contract that's written geopolitically, these are massively disinflationary pressures again. If you don't have the military industrial complex, like, creating these like supply chain breakages, and that's something I'm watching closely. And watch break even inflations, watch the dollar, and watch credit spreads, and that will give us an indication that the world is changing somehow, and maybe we adjust our risk thresholds at that point.
I feel like I'm fading pretty heavily any sort of like significant inflation reacceleration. Like, I feel like, if we think that 60% of that run up to 7-8% or whatever CPI was supply chain related, I just don't really see how we get that sort of move without that. Like, you can print a bunch of money, helicopter money. I'm sure, that could get you, I don't want to quantify and throw out a number, but yeah, you'll get some inflation. But like, to get above, like, my simple framework is this: is that I'm not worried about inflation until CPI is over 5%. I'm not worried about inflation until oil's above $100. As long as that's not happening, I just don't see how we can get that fundamental upswing in CPI.
Yeah, I agree. I mean, like, take 70s as an example. I mean, take 22 as an example. These super inflationary bouts ultimately usually stem from some sort of geopolitical event that spikes energy prices. And if you look at Trump's 4 years of in office, right? Like, he was the first president in a couple decades to not start a new war, looking to kind of strike deals instead of construct aimless killing. Yeah, he's pretty constructive for economic activity. So that's what people kind of also don't see or account for when they just harp on tariff. Well, I would say, like, way worse than tariffs is when half the world's lobbing bombs at each other and removing any sort of communication and trade and commerce between the entire Middle East and Russia, one of the largest exporters of base commodities and grains and agricultural things. Like, you're blowing up the Nord Stream pipeline from Russia to Europe. Like, what's like? Anyways, I'll stop on that. But like, anyway, I shorted gold this week, to give you an example of like.
I was going to leave that out.
Like, yeah, pulling out do you think that's just like geopolitical risk premium coming out?
I think it's a bit of everything. I think a little bit of that. I think it's a little bit of gold has already front run all this Fed easing to some extent. I think that, if oil melts a little bit here, I think inflation's less of a concern. And above all, I would say that the core of the thesis is from a cyclical perspective, this is when gold starts to, underperform. Because if you think about late Q1, Q2 to September, to the 50 basis point cut where the Fed took off recession from the outcome probability distribution, the concern was not really if the Fed was going to ease. We knew they would. It was more of when the Fed was going to ease. And it was, is there going to be a recession? Is, cyclically, are we decelerating and continue to fall? And in those cases, gold can perform very well, and it did, because you have the Fed easing, but the market is still wondering, is this enough to re-stimulate economic activity? And I need a safety valve that protects my currency debasement, and also, if shit blows up. And now you're getting to a world where Trump's elected, peaceful, animal spirits are going to be high, business leaders are going to be hiring, and you're going to expect an economic reignition. China's stimulating, all central banks are easing, and you're going to get this reignition in the economies, and probably a little bit higher animal spirits and less need for this doom and gloom protection. And so this is where gold kind of hands the baton to Bitcoin. And so I like it as a hedge. I mean, it's not something you want to really size up as like a big short, because like then you don't want to be like short tail risk geopolitical conflict, because it probably does well in that situation. So it's more of like offset a little like other commodity, more cyclical commodity exposure that I have.
Yeah, that's fair. Maybe we can just talk a little bit about crypto as we wrap up here. You mentioned passing the baton to Bitcoin. We blew through the all-time highs. We're all three of us are pretty big crypto fans here. Yeah, what are you thinking about there? What's the move? Are we just riding the all-time high waves now that we passed through it? And yeah, what do you guys see there?
It's pretty drastic, the change that this brings, because I would say, don't forget, obviously we've had this red sweep with a big ticket to implement change, which is extremely pro crypto regulatory. The pro crypto PAC was the largest single issue, influence in this election down ballot across the House and Senate. And that matters because, one, they've been able to get a lot of pro crypto Democrats in. So this makes room for bipartisan policy improvements, but also for future elections. What's the guy that almost lost his local race because this huge crypto PAC was helping the other candidates starting to think and see how much money in this? Politicians, show me the incentive, I'll show you the outcome. That's all they care about is re-election. They don't care about their people in most cases. So it's very positive, and I don't think it can really be priced in overnight. I think, even up until like Trump's election, right? This kind of reminds me of the Bitcoin ETF in January, where you knew it was out there on the horizon, and you didn't know if it'd be 100 billion of inflows in the first month or if it's zero, but it wasn't going to be negative. So it kind of pins and puts a floor on price, because you have Trump's inauguration and these huge promises for his first 100 days. And let's see what happens and how quick it happens. But we know with the red sweep, it can happen pretty easily if it's a high ranking priority, which, everybody in his cabinet and administration is pro crypto, and you have serious momentum behind things like potential strategic reserve or others. So it's monumental, and I mean, it kind of, I think, finally puts a nail in the coffin to like the Bitcoin and crypto as rat poison view. And if you're a macro non-crypto person, you can't bucket it with ARK, Cathie Wood garbage patch stocks anymore. You have to at least acknowledge it as being a real asset. And I think that's, you saw a re-rating overnight post-election, but I'd imagine people are still off sides relative to what they want in an allocation perspective, and just kind of trickles in.
Yeah, if you get the Bitcoin strategic reserve, that in itself creates a whole new geopolitical game, which maybe is why you'd sell gold here too, because I think if you can delever your economy by owning Bitcoin and the price keeps going up and up, I found one thing interesting is Bukele was one of the first people that called Trump to congratulate him, and that was really symbolic, I thought, of like a stamp of approval from one of the philosopher kings of Bitcoin. And I just think, one of the best, side tangent, I own it personally. Again, can't own it in the fund, but Solana is literally the best chart in the entire market right now. If you look on like a 3-4 3-year basis, it's like the prototypical cup and handle, technicians gold, and almost on the cusp of breaking out here. Probably by this weekend it will, I'm guessing. But yeah, there's just so much bullish stuff behind this right now. And
Sounds like we're in the banana zone.
I don't want to jinx it, but it feels like we might be in the banana zone.
Banana zone. Raoul
And,
Powell has brought us to the banana zone.
You know what else is interesting is people are a little bit reluctant to buy it. Like they see it.
Yeah.
I've asked a bunch of people like, hey, you guys own Bitcoin? It's almost at new highs. They're like, I missed it. I missed it. And I'm not getting the mother-in-law calling, hey, should I buy some Bitcoin here at the top? This is more like everyone is in the camp of like, it's up so high, I missed it, which is just going to cause it's like that. You watch it go up every day, and then it rips and you're like, okay, I'll buy it now. And that's the local top. But I think that's kind of the cycle we're in now. And what's also fascinating is there's really, unless something happens that is not in the bell curve, like they go after Trump again or, try to assassinate him again, vol is going to be drifting lower and lower into the holidays. Earnings are coming out better and better. Like, I don't know if you watched like Upstart today. It's up like 40%, 45%. Like all the dreck, Stan Weinstein calls it the dreck, is ripping. iHeartRadio, remember I talked about that last week, that it was one of the high yields companies, was up 30% yesterday. Like all this stuff that's been basically beaten up on a higher cost of capital, relatively speaking, is now just crushing it. And no one's paying attention to it because the FANGs aren't making, all-time highs left and right anymore. And that doesn't mean there's not a bull market. There's always a bull market somewhere. So I think that's just more synonymous with the crypto frontiers starting to work again, as the cost of capital drops for the rest of the ecosystem, not just the large FANGs.
Yeah.
How about I love the Elon assets too, that like Tesla just mooting. Like,
dude, look at DXYZ. I bought some SpaceX recently. I got lucky. And have you seen this?
No.
DXYZ is it's the private, Destiny Tech 100 private corporation. It's up 43% today. So basically, I think this is something to watch. I don't own this, but this is the IPO market is thawing, right? Like we're watching the frontiers actually be incentivized again. For 4 years, it was like, what was incentivized? Big tech was incentivized because that's collectivist and it controls everything. And it's very centralized. That's what happened. That's what is good under that regime of people. But now when you have the administrative state and the red tape and the bureaucracy crushed, innovation works, believe it or not. And it's starting to tell you that. I just think, most people haven't put those two and two together, is that you're going to want to be a frontier investor. And if you're still in risk-adjusted returns, sorry if I'm roasting risk-adjusted return people, but
sharp ratios and shambles.
Dude, I think you're just going to be crushed by the relative performance, because we've been in secular stagnation for 30 years, 40 years. This is a whole new political philosophy. I want to do another interview with one of my political philosopher friends. I think we're starting, like, the age of liberalism is gone and we're actually entering a whole new thing. And it, which is kind of out there, but I think we're seeing all the stock reactions telling me this is different. We're in a different regime here.
Well, look, guys, I think we deserve a little pat on the back for our market calls in recent months, I think. But we won't get too excited. We'll try to be a little humble, but I don't know. It's been a good couple months, and it was great to just round up the experience and what's next here.
Never let a win go to your head, nor a loss to your heart. It's my old man used to say that.
I'm spending I'm spending the next week re-underwriting. We had a big period of the markets, everyone just kind of flooding in, trying to react instantaneously. And I think, over the next couple of days, weekend, people are going to go home, markets close, and make, think about what they need to be positioning going into Q1 under this new regulatory and potential fiscal monetary environment. And I think it's a good time to kind of re-underwrite all your priors and previous theses and make sure you're on the right side. And I'm going to do that with my monthly letter and get that out.
I do want to pump Quinn's tires for a second because I need to plug him because I have no incentive in this, but reach out. Lecker Capital is taking I don't know if I can do that. I know
you can.
But I feel like you should kind of check that.
Quinn had skin in the game.
Yeah.
We'll just say that. Quinn had skin in the game. He had his views out there.
I can't jinx anything, but hopefully we don't give back the early month start and we'll be out there touting the
we're about to crash and next week we'll be like, God, we're the top indicator. Oh no.
Yeah. Well, that's a good. Yeah. All right, guys. Thanks for another roundup. Have a good weekend.
Have a good weekend, boys.